Joining me now, Nancy Tengler, CEO and CIO at Laffer Tengler Investments. Nancy, great to have you back at the desk.
I know, so good to be here, Caroline.
So Nancy, you called a bottom earlier this month and you were buying into it. How confident are you that you were right? And how much upside is still in store?
Well, it depends on the time frame, but I would say we're very confident that we were right. You saw the market go down for 42 straight days, and then it's recovered everything just about since we called it in about 11 or 12 days. Now today's a little volatile. We get that will continue because that's how markets work. But we think the narrative is there. Stocks ultimately trade on earnings, and earnings growth is expected to be somewhere around 20% this year, and a vast majority of that is driven by technology earnings.
So what is it that needs to happen for stocks to continue to move higher?
I think companies just need to continue to meet or beat estimates and raise guidance. And so what we've seen is the companies that haven't done that so far this season have been punished pretty severely. But generally speaking, the news has been very good. And I think this week will be the big tell with all the hyperscalers reporting.
But, yeah, it's a big week. It's a Super Bowl, actually, for big tech earnings, which they've had a huge run heading into this quarter.
Yeah.
So the bar is pretty high. Do you think that even with a beat and raise that there could be some disappointment there? What are you expecting?
Yeah, I do think there can be disappointment. I think that's in the near term. The markets are really dominated by the algorithms, and then the hedge funds jump in and increase the volatility. But over time, and I'm not talking 10 years, I'm talking months, and then our investment horizon is 3 to 5 years. We expect to see these names continue to be among the top performers. Now, that doesn't mean we're all tech all the time. We're overweight industrials, consumer discretionary, and financials, though not really focused on banks. But that is a cyclical pro-economic growth kind of a trade, and we think that's going to continue. No stagflation in our horizon.
I want to get into your playbook in just a second, but first let's stick with big tech earnings because that is really the highlight of this week. Are there any that you think are poised to really outperform, any that are already kind of stretched heading into the reports?
Yeah, I think, I think any good news from Microsoft would be beneficial to the stock price, but I don't know that we're going to get that yet. So we're still holders. We added to it recently. I think my favorite among the hyperscalers, or the Mag 7, whatever you want to refer to, is Amazon. It's been underestimated. It's had a nice run, broke through resistance, but importantly, the fundamentals are there. You've got a great CEO who is now hitting his stride. You've got AWS, you've got advertising. You have their chip business, Trainium, which they just signed a joint venture with OpenAI, I believe. So there is a lot to like about the underlying company, not to mention the consumer business. So it's in our 12 best ideas portfolio. It's in our across all of our strategies, one of the largest holdings.
But you already got in, and Amazon is up more than 25% this month alone.
Yeah.
Is it too late to get in, or you'd be a buyer here?
So I always talk about, I'd still be buying. I always talk about the performance of that stock since its IPO. It's up 175,000%, give or take. When was it too late to get in?
Yeah.
This is a great growth company that continues to adapt and pivot to new technologies. It's really a stellar management team. So I always use weakness in this stock and many of the names in the Mag 7 to add to holdings because the long-term narrative is still intact.
Yeah. Is there a name that's had a really impressive run that you do think it's too late to get in?
Yeah, we've been trimming Lamb. It's the largest holding in our ETF TGLR. We've been trimming it. We're not selling it, but we're pulling back some of our holdings. We just trimmed Teradyne, Rocket Labs. We just added to Rocket Labs. Planet Labs was one that we trimmed back on. So there are times when you need to do that. We've done that with Apple over the last almost 15 years, and we've done it with Broadcom. So it's a question of, do you still want to hold it? And there are names that we have exited, to be sure, but mostly they're marginal trims because our time horizon's pretty long.
You mentioned your ETF. It's actually outperforming the S&P 500.
Yeah.
What are you seeing that the market might still be missing?
I think we're looking forward. So, calling the bottom, if we didn't act on it, wouldn't have been helpful. We did trim in that ETF. We trimmed our energy holdings by 20% last month when I was here with you, and we added to Microsoft and housing has dramatically outperformed. That's what you have to do in turning points. But we have a market that tends to be a follower market. So read the headlines, do what just happened. We don't do that.
Okay, so let's dig more into your playbook. You'd be
Okay.
buying Amazon here, you said.
Yeah.
Where else would you be putting money to work right here, right now?
Even after the recent increase in earnings and therefore performance, we would be adding to GE Vernova on any pullback. It's in every single one of our strategies. We like the company, we like the name, we love the backlog. We would be adding to, we recently added to housing, as I mentioned. We added to Tesla recently, Palantir, a number of the software names on the weakness that was generated by AI is going to eat software, that narrative. We think there will be winners, and the names that I just mentioned are among the winners.
Is that why you think Tesla's down and lagging because of
No.
the AI disruption fears? Okay.
No, I just think it's a stock that investors love to hate and love to love. So you get these big moves. Like we bought it during DeepSeek, which was just a little over a year ago, at $240 a share. We initiated our position just 3 years ago at $100 a share. So you can see a lot of move up after the $240 purchase. It went up to $450 or so, and now it's back down to $350. I'm still pretty content. It is for us the stock you kind of have to own for the next 10 years. It's AI, it's the SpaceX potential merger, it's full self-driving, it's the battery storage business, and ultimately it's Optimus, the humanoid robot.
If I gave you money today, what's the first stock you would buy?
Oh, that's a hard one. I'm a portfolio manager. I always have to name three. I'd probably be adding to Tesla. Yeah, or Palantir, either one of those.
But make the case a bit more for Tesla, because even when it beats, it hasn't been that loved. And
Yeah.
It's lagging in a market that tech is really dominating again right now. So why would I want to own that?
And Caroline, the great irony is they beat on EV sales this last quarter, beat on earnings, and the market went, eh. I think we're waiting for what happens with SpaceX. We believe that'll be a catalyst. I think
A catalyst for Tesla, though?
absolutely, yeah. I think one of the things that we were all talking about not that long ago was Elon Musk's pay package. The way he gets there is by putting the companies together, in my view. So I think you'll see the companies get put together, and SpaceX, there will be a lot of enthusiasm, and I think there will be spillover into Tesla.
What's one position that you've added to recently that might actually surprise some of our viewers?
I think D.R. Horton. And the reason we did that is because we're looking ahead, and we think that this president knows he has to solve the housing logjam. There has to be some sort of an incentive. They've tried. They haven't gotten very far. So Kevin Warsh being confirmed this week will be a good step in the right direction. But I think housing is going to be the sleeper surprise. It was in our 6 for 26 portfolio that we announced on January 1st.
We also have a Fed meeting this week.
Yeah.
Do Fed meetings even matter for the overall market, really, in terms of the direction, or is this a market that no longer is policy driven?
I think it might be the latter. I think you might be right in that regard, especially this meeting where we're going to have a handoff pretty soon. I do think the bond market will try to test Kevin Warsh. That always happens. But I think for the overall stock market, the Fed has cut rates significantly, and the 10-year is in a little range. It's range bound. So the market is not necessarily agreeing with the Fed's movements. We'll see if that changes.
What's the biggest risk to your bullish view? What would make you change your mind that this is a market that you might not be as constructive on?
I think when it will ultimately happen, and I think what we'll be looking for is a slowdown in earnings growth and a movement possibly to negative. These are pretty lofty numbers that we have to sustain year over year. Margins are at a historic high. What if we start to see margins contract? What could drive that? Well, it's inflation, energy. If this war in the Middle East continues much longer, I think you'll start to see the ramifications throughout the economy. That said, if we lived in an isolated world, the U.S. is fine. I mean, we're the marginal net producer. Our costs are much lower. Energy costs are 1.5% of the average consumer's budget. But but there will be trickle through, and that's one of the things that we'll be watching. And then way out there, the debt. Like at some point, we have to contend with that.
Okay, and then just quickly, in the nearer term, especially for big tech earnings this week, what is it that you'll actually be paying attention to on these calls? Is it AI implementation, margins? What specifically is it?
I think it's all of that, but it's also monetization of AI. So last year, last quarter, Microsoft got dinged because they were capacity constrained. That may still be a problem for some time. So we want to hear about CapEx, but we want to also hear about production from the CapEx. How fast is Azure growing, for example, with Microsoft?
So for anyone sitting on the sidelines right now that maybe thought we were going to see a bigger pullback, a better entry point, what's your best advice to them in terms of what they should do at this moment?
It's time in the market, not timing the market. And when you look back historically, if you missed the 5 best days over a 30-year period, it was the difference between investing $1 million and having $13.5 million by staying invested, or investing $1 million and having $8 million over 30 years. I want the first one. So you stay in, you add if you can, if you have dry powder, you add during these periods of weakness. Markets are up 80%, 2/3 to 80% of the time, and this is a transformational period like the 90s was, and I was managing money then, so I was there, I saw it. There was a lot less skepticism then. That's the good news in this market. Investors are still skeptical. That means we can go higher.
Still skeptical, but we keep hitting all-time highs, despite the fact that you talk about the earnings growth, but there's a lot of headwinds that this market is up against, including oil that continues to not be all that far from $100 a barrel yet.
Yeah,
you know,
always climbing a wall of worry. And the question is, what is the market looking through to? And the market ultimately and always is looking at earnings and earnings growth and the productivity gains that we're going to see from these and are seeing from these technologies. That's also been our theme for the last 4 years, because that's what we saw in the 90s.
Okay.
And it worked.
All right. Well, I think it's a good time to transition to our rapid fire game of this or that. Quick questions, quick answers. Are you ready?
I hope so.
All right, here we go. Bullish or cautious?
Bullish.
This rally, justified or overdone?
Justified based on multiples.
Buy here or wait for lower?
I'd add some here and continue to.
AI winners, chips or infrastructure?
Both.
Software, reset or still at risk?
I think it's a reset, a re-rating of the stocks.
One software name you'd buy here?
Microsoft.
One you'd avoid?
Adobe.
Big tech after earnings, higher or lower?
Probably lower.
Margins, sustainable or peaking?
I think they're sustainable due to productivity.
Micron or NVIDIA?
Ooh, we own both. At this stage, I'd say NVIDIA.
NVIDIA or Microsoft?
NVIDIA.
Palantir or Microsoft?
Palantir.
GE Vernova or NVIDIA?
GE Vernova.
Tesla or NVIDIA?
That's a hard one, Caroline. Tesla from here.
ServiceNow or Microsoft?
ServiceNow.
Adobe or Salesforce?
Neither.
Would you be a buyer of the Oracle weakness?
We own it, yes, at the margin.
Highest conviction trade in your portfolio right now?
I'd say GE Vernova.
And just quickly, biggest risk to your bullish view?
Disappointing earnings.
Do you have a price target for the S&P 500 for 2026?
No, we don't do that, but it'll be higher.
How much higher?
I think we have 10% from here.
Okay. Nancy, always a pleasure. Thank you
you
so much for your picks and your perspective. Really appreciate
Thank you so much.
it. That's Nancy Tengler, CEO and CIO at Laffer Tengler Investments. If you enjoyed this Street Talk, check out our full interview with Jim Cramer. He breaks down exactly where he's putting money to work right now.